You're watching Mirror 7 News. Stay informed, stay ahead for more news.
ConocoPhillips, one of the world's largest independent oil producers, has announced that it will be reducing its workforce by as much as a quarter. This decision comes at a time when global oil prices have been sliding, creating a tough environment for energy companies that rely heavily on strong commodity markets to maintain profitability. The announcement has sent ripples through the energy sector. It was explained that the decline in oil prices has pressured margins, and as a result, restructuring has been deemed necessary. By cutting staff, the company aims to reduce costs and safeguard its financial stability during what is being described as an uncertain and volatile period for global energy markets. ConocoPhillips has faced difficult choices before, but this move is significant in scale. Up to 25% of its workforce could be affected, which means thousands of jobs may be lost. Employees across different divisions are expected to feel the impact, although specific regions or departments were not detailed in the initial statement. The restructuring is framed as a strategic adjustment to ensure that the company remains competitive and resilient in a world where oil demand growth has slowed and alternative energy sources are rising. The oil industry has always been cyclical, heavily influenced by market swings, geopolitical tensions, and changes in global consumption. In recent years, a transition toward renewable energy has also been accelerating, putting additional pressure on traditional oil and gas producers. For ConocoPhillips, the downturn in oil prices has amplified these challenges, forcing the company to rethink how it operates and where it can become leaner. This development comes at a time when other energy giants are also reviewing their strategies. Some are doubling down on oil and gas investments, while others are diversifying into renewables to hedge against the long-term decline in fossil fuel reliance. ConocoPhillips, however, remains primarily focused on oil and natural gas production, making it particularly sensitive to fluctuations in crude prices. For the employees affected, the news is undoubtedly difficult. Layoffs of this scale disrupt not only careers but also communities tied to the energy industry. It was noted that support measures may be offered, but details remain limited. Industry analysts have pointed out that while such cuts are painful, they are often seen as a necessary step to stabilize operations and reassure investors. In short, ConocoPhillips' decision reflects the tough reality facing oil producers today. A combination of weaker prices, rising competition, and a changing global energy landscape has created conditions where efficiency is prioritized over expansion. The coming months will reveal how deeply the cuts reshape the company, but the message is clear. Survival in today's energy market requires difficult choices. Stay subscribed for more videos.